explode that hit right as we started rallying. So that may have been it. The Treasury, 305 billion, didn't show me too much, but it also came out at about the same time. So one of the things that this European emergency fund is doing is that they're killing these credit swaps, which means if you don't have a credit swap to protect yourself, that you will be more exposed to outright interest rate losses, and that will actually increase the cost of borrowing in the EU and places. So the way this whole thing will unwind, and the way it'll all come together out of Europe, without having set aside the cash to cover all the potential defaults, then you're really left with the derivatives market. And some of the articles coming out saying that those derivatives will be pushed from the borrowers and lenders, and you get your hair cut. I mean, how are you going to get somebody down the road to buy Greek paper or Italian paper or whose ever paper it's going to be without those credit risk default provisions? And so these are really, really, really tough issues, and there's no real easy solution to them either. So this is not an easy thing to unwind. The most likely, and it's why the Fed is pushing so hard right now, is deflation through deleveraging. People don't have the money. People can't borrow the money. Assets are worth less. You can borrow even less, and you see that going on in our real estate markets, commercial and private right now. And it's been the hope from the Fed from day one not to let this happen, and they haven't been able to stop it even with all this borrowing. Okay, we have an inside day on our F1 screen. We'll see the market is going to rally tomorrow because Bill said it was, or was most likely to rally. So we'll see if that happens. But we're still dealing with fairly strong P's. And the inside day says the market's looking for direction. Now, I see over the horizon more problems than I do solutions. Some of the articles out today on the Chicago PMI was that this little island of strength in manufacturing in the Midwest might be catching up, starting to go with the rest of the economy. Don't know, but I think that it's tougher to paint a rosier scenario right now of getting back into the growth mode than it is to growth contracting. So my guess is that the most optimistic forecast out right now is the Fed, and the Fed says while their forecast is problematic and does present some issues, they still believe that slow growth is what will happen in our economy. So we will see. Looking at this, 1290 off of 1070s, 220 points. 20-point correction takes us down into the off the top, would have taken us to 70. We got just below 60, so that's 50 points off the top would take us to 1240, which would pick up this area right in here. So my guess is it's the first of the month tomorrow. You'll have a battle between the hedge funds that want to go short, the ETFs that play the short side of the market, and then cash investments by mutual funds. And if I were a mutual fund trying to time it, I would try to time my investments, after the middle of the month, because the market's shown a propensity to rally in that last week of trading. So we'll see what happens. We got an inside day. It says the market's looking for a new move. Looking at our F2 screen, to show you the powers that Bill Thomas has today, he took over the Adobe room and crashed me. Now I'm wondering how in the heck he did that. That's pretty funny from my standpoint. Almost funny, if you know what I mean. Okay, here's our potential move out of the middle. We got to be a pretty square distribution. And right now it looks like the sellers are a little bit more in control. We got 11,156 now. And the market is pointed lower. So 1290 is the high, 1070 is the low, 110 points off of 1290 takes us back into that 1180 area. 1175 somewhere in there. So excuse me, 1185 area somewhere in there. So we'll just have to see what happens. And there was a high volume number down there in that area, so we might get there given a little bit of time. This one says look for a place to sell it. Now these credit, what happens on these credit swaps, and it's almost like musical chairs, as these people, when you get into spread trading, what happens is, well, you think I'll be long or short the note, or whatever it happens to be. And then you get in and you see deals on one side and the other, and you start taking profits, or you add to your position. So these swaps and these spreads against credits, they become ever more and more complicated, and they just kind of have a life of their own, and they grow. So you might start out with $1 trillion worth of credit default swaps and might end up with $5 trillion as everybody tries to spread the risk and work their probability tables. So it gets to be very, very, very complicated. And the only way you ever resolve that is you bring everybody that holds them to the table and say, you're going to walk away from these positions or go out of business. And that's the way it's been resolved in the past. But in the over-the-counter options where you can go get a bank to write you an option on any and everything, it just is, this is not going to quietly and cleanly resolve itself. Okay, we were looking for a new move out of this 64, 65 area. I thought we might actually close there. We got those that 40 to 45 area is pretty good support down below and stops below 50. Probably not today, but we're certainly there. But this is the number. You can see that we have our peak buying in this area. If I had a better cursor, if I had more control, it's this bar right here. So that's got to be short covering when you take this out. And as soon as that bar gets out of the way, a new group of people come in and start to sell it. Then we get lower highs. And look what happens to the volume when we take that level out. Probably the width of this bar was based on the volume that was done below that bar, not getting into it. And we're into this low volume area in the 55 area. So 55, 57 was one of the spots we thought we might get to today. And it sure took a while, didn't it? So this one confirms the selling on the F2 screen. Now, the F1 screen on the note, I'm guessing it's the credit default article that hit in the, I think it was the Financial Times, but I'm not sure. Tomorrow's news, ISM index at 52.1, construction spending at +3. So this one clearly favors higher prices, buying weakness to see if we can extend the range. Looking at this screen, where might resistance lie? This 29.04 to that spill up there from 29.14. So 04 to 12, where we have this single print area, is pretty good resistance on this chart. And then if we get through that, there's no real reason not to get back up to 130. And what would take us up to 130? Anybody? We need some help. Would it be out of the E-mini, or would it be the E-mini reacting to news out of Europe? So this one says higher. Higher low, higher high. Volume moved higher in the last 2 days. And so it's pointed higher here. Max, you poisoned my daughter's mind. She bought her first juicer. Ugh. I have to get the mafia after you back in New York City. I guess they still do hit jobs, right? You have to be Italian to get the mafia to do a hit job on you. That would make you safe. Well, I hear there's gourmet food down there, which is really ironic. Here are these people equality, liberty to everybody. The first time the homeless show up, they start shutting down their kitchen. They're not going to cook meals for those people. So no more range-fed chickens, no more salmon pâtés, no more organically. Of course, I don't know what food is not organic when you get down. Maybe Tang. And guess who's paying for Acorn? Acorn, taxpayers. Now that's really, don't you love this? We pay, taxpayers pay for all these leftists and legal foundations and environmentalists tripping us up every step they can. It infuriates me. You know, if they could go out and raise that money on their own from people out there and let them have at it in the market of ideas, but God dang it! Why did my tax dollars have to go to this stuff? I always feel like I'm halfway making it until tax time runs around, and then it's a scramble to dig up or let go of the money. Okay, definitely a P. We talked about it. New move out of the middle, an L period. Certainly an M. So how high can we go? It just, you know, the productive part of our economy pays really for both sides, and they fund that part of the people that lobby and demonstrate and do a vote to get money from Paul, who's worked for it, and the politicians count on that money to get recycled and stay in office, and their most faithful contributors are the unions. And unions get better working conditions, better hours, they get the minimum wage raised. And a lot of people don't know why unions are for the minimum wage being raised. It's because their contracts are set off of that. If the minimum wage goes up, they got to maintain that differential. They get a pay raise too. So here we are at 129.09, and we've got a low volume number at 11. So there's one. We've got a high volume number. This is the lazy man's way of doing it. That's 2. We've got a high volume number right here at 20. That's 3. And we've got this high volume number at 24 and a low volume number. Actually, the high volume number is at 20, 23. So there's 4. Now, that's what I call the lazy man's way of doing it, and that long-term distribution can do that for you. Plus, I don't get phone calls from JP when I do it this way. Magic JP right there. Okay, on the downside, we broke this thing out at 02. We have that. We have some low volume numbers here in 5 to 6. I've got the close at 2.5. So right now we're trading 9. So what do we have in this 4 area? Got really low volume numbers from 3 all the way up to 6. So 3 to 6 divided by half would be 4.5. There's 1. Here's an M period low right there at the buck. There's a J period high. There's 2. Here's our move out of the middle and L period 3. And then we have that last rotate down in Z periods at 20.5 and the D period lows at 24. Now the real lazy man's way of doing this would have been 4, the buck, 28 and 20 to 24. But I do say that I look at this stuff. And the important thing is that you do look at this stuff and you do say, yeah, there were some pivot point highs and low in there. There's a high volume number here and there. And in looking at that, it becomes a part of you. So there we have it. Okay, based on the close, I was hoping to buy 29s to 01s. It may take 5s to get in, depending on what goes on in the E-mini. And then, based on where resistance is, the 129, 20 to 28 area would be pretty good. So maybe 19s to 23s to get started, and we'll pick it up in the morning. ISM tomorrow, looking for 52, construction spending plus 0.3, truck and auto sales. You're welcome, Max. Y'all have a great evening. See you at 0700 hours Central Daylight Time for another 4 days this week. Mañana. Later.